There are a handful of things related to the income share agreement structure that we think provide us an edge over other sort of competing products that are out there. So it's probably obvious or intuitive on sort of the upside scenario why an income share agreement does better than a loan. Obviously, we're levered to earnings. If someone's earnings increase, the payments to Cumulus go up, and we make more than sort of the traditional term or installment lender does. What is possibly less intuitive is in that downside scenario, when the individual's earnings go down or they see an interruption in their income for some reason. In many cases, Cumulus will actually do better with our income share agreement than a traditional lender would have. The reason for that is with a traditional installment loan, regardless of your employment or income situation, you owe a fixed amount of payment each month. In many cases, when individuals, especially in this consumer segment, have an interruption in their earnings, they're going to be unable to pay or to meet that obligation for some period of time. So let's say someone's unemployed for months, call it 4 through 6 of their contract, with a traditional term loan. By the time they're employed again in month 7, they're now several months behind already. Their credit rating's already been taking a hit, and it's very unlikely, having just come through a period of financial fragility, that they're going to be able to catch up on those payments. What that's going to lead to for the lender is a default, whereby after, say, the 3rd month, in my example, they never get another payment out of this consumer, and they write that debt off. With an income share agreement, what you have is a structure whereby those payments, while the consumer is unemployed, are forgiven. They contractually owe us no money during that period of time, but once they are employed again, because they're current on their contract, they're not behind, they should be able to continue to service, starting in month 7 when they've regained employment, their payments on a going forward basis. Consequently, Cumulus will get productive cash flows from that consumer in months 7 through 48. So we've contractually forgiven 3 months, but over the longer term, we'll do better than the traditional sort of installment or term lender does.